Awesome. So this is going to be talking about support and resistance, or just also known as simple market structure. So support and resistance is the key levels that the market is going to be playing in between. We have support, which is going to be the floor of price. If you ever get confused, just think you walk on the floor, price walks on the floor, which is your support. And resistance is what is going to be rejecting price almost as a ceiling or a roof. So if you ever get confused, just look up and be like, roof, price is getting rejected every time it hits the resistance. And when you're first starting out, how simple it is we're just going to be just buying off of support and selling off of resistance. That is how the key levels in the markets work. And once these key levels are broken, so it say, for example, this support is broken, we're going to wait to see it be retested and respected as resistance. And then that'll allow us to hop in for the sell, because like I said, we want to be selling off of resistance and buying off support. So if support is broken, we're going to wait for it to be retested as resistance. And if you know, when you have a good level of support when it acts as resistance, and you have a good level of resistance when it acts as support, vice versa. So it's support and resistance for these lines, but it's just all about the case you're currently looking at what the line is being used for. So let's go ahead and just slide down to the charts for a second. And one thing I did forget to mention was this can be applied on every single time frame. The higher the time frame, the more powerful, I guess you could say, the support or resistance is. And what I mean by that is if you find a support and resistance line on the daily, it's going to hold a little more weight than, say, a 1 minute or 3 minute support and resistance line. So you want to keep that in mind when you're applying lines to your chart. You don't need a lot of lines to support and resistance, maybe 2 to 3 at most of each. It just keep it nice and simple so you don't confuse yourself and your analysis and what you're seeing in the market. And one great way to avoid putting a lot of lines on the chart is what I call the touch rule. So it's easy as 1, 2, 3. One touch means you might have identified a level. 2 touches mean, okay, this is probably going to end up being a key level of whichever one is going to be. And 3 touches lets you know this is a confirmed level of, in this case, resistance, and it works as well for support. So as easy as 1, 2, 3, that's a key level of resistance, and that's a key level of support. And like I said, when you know you have a good level, when it works is both ways. So this over here was acting as a level of support, and over here we can see it's acting as a level of resistance. And put another line, right, or highlight this. So in this case, we have our breakaway trade. Once it broke this level of resistance, it came back over here, and we could have hopped in for the buy, knowing that this was already a key level that it was now just retesting as support. So that is support and resistance and simple market structure. If you have any questions, please reach out to one of the mentors. I'll catch you in the next video. Peace.